yesterday that banks' earnings could be lower this year due to higher interest rates. Higher rates mean more income for the banks, but Moody's has argued that it also means that more people won't be able to repay their loans, pushing up those bad debts. To discuss, we're now joined on the line by the Vice President, Senior Credit Officer at Moody's, Nondas Nicolaides, on the line from Cyprus. Nondas, thank you for joining us. This is so different to what many people were saying. The markets rallied, investors were pleased. Are you certain that this is going to hurt profitability rather than help?
Yes, good evening, Francis, and thanks for inviting me on your show. We did publish this comment yesterday indicating that the recent interest rate increase will have an impact on banks' asset quality and earnings growth. The MPC statement, if someone reads that, it clearly indicates that we're moving towards a stagflation scenario in South Africa, which is not the ideal operating environment for banks. The higher interest rates will lead to higher lending rates for borrowers. So it's going to raise their loan repayment amounts. And this is at a time when inflation reduces the consumer's disposable income. So these borrowers' reduced debt affordability will inevitably lead to higher non-performing loans, which will reverse the improving trend that we have seen in the last 5 years or so.
Like you say, Nondas, bad debts have been coming down in recent years. Just tell me, how strong are our banks? We've always had pride in the strength of our banks, the way they were able to come through the crisis. If we're entering a tough time, are they ready for it, given what's happened in recent years?
Yeah. No, I would say that banks are strongly capitalized, so there's no issue or no concern regarding the viability of the banks and their position to absorb these, let's say, shocks in the economy. What we're referring to is more of the earnings growth that we have seen in the last few years. This is unlikely to be repeated this year and next year. So asset quality will impact their earnings growth. But when we look at their capital position, they're still at very comfortable levels, and there is no, let's say, concern on this front.
So, Nondas, what do the banks have to do to enter this, to be strong? I think you spoke about cutting costs. And as customers, are we going to be receiving higher fees? As far as I know, South African banks are more reliant than some banks in some countries on those fees to start off with. Yeah.
Well, probably the banks will be much more cautious in their lending practices. So, their underwriting criteria will definitely be tighter going forward. The assessment of the consumer affordability in a higher interest rate environment will be vital. And obviously the interest rates will also be higher. So, they will benefit from higher interest income. But at the same time, they are likely to have higher credit costs from the higher NPLs. So, it's a balance that the banks will have to manage going forward in a stagflation kind of scenario that we're moving towards this year, next year.
Nondas, finally, and this may be a curveball, you were focusing on South Africa, but are our banks doing enough to look outwards then to the rest of Africa? And could that still help the situation when we know that Barclays, for instance, is pulling back on its investments in Africa? Is this something, I guess what I'm asking, is this something that's bigger than South Africa itself?
Sure. Well, the South African banks, it's only natural for them to expand in the rest of the continent, being probably the strongest banks in the continent, and South Africa being the gateway for Africa. So it definitely helps in diversifying their assets and their earnings. But at the same time, again, some of these countries have a higher risk profile than South Africa. So again, they have to be really cautious on this expansion front. Now, regarding Barclays and some of the press articles we're seeing, whether they are withdrawing from Africa, I mean, we wouldn't be in a position to comment on that. But I guess this is a strategic decision that an international bank has to take. So.
All right. Thank you so much for your time. Nondas Nicolaides from Moody's Investment Services on the line from Cyprus.